Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the weekend of Memorial Day. It is today, Friday, the 26th of May, 2023. I want to thank all of the soldiers who fought in the Civil War. That's really what Memorial Day is named after, and gave us our liberties. All right, so to all of them, thank you. That's really what this holiday is about. All right, so another event, a quickie pulled by the Biden administration. As you know, the negotiations have been going fast and furious. What little bits we do get a piece of makes it sound as though they have made good headway. They claim both sides don't win. I don't know which side is going to get the most out of the deal, if one side does or doesn't. But an impasse developed where over this workers' rights. In other words, basically, the battle is that in the House bill, they want you to work, if you're able-bodied, to work 20 hours a week to get your Medicaid and other government programs. The Biden administration, mistakenly, wants to not put any restriction on that. Why? If you're able-bodied, why wouldn't you get and have to do something to get all that? I mean, we all work. I work. If you're watching me, you probably are retired or worked your whole life or working right now. So I'm not for that. The people that aren't working, I know they're not watching this show, so I don't have to worry about that. So how do they get around it? It's really simple. Everybody was working really hard because, in theory, you wanted this bill done tonight so it can be written, delivered Saturday. People would have day one because of the 3-day rule at the House. Day one, they could deliver the bill via email in any way. Day one. Day two, Sunday. Day three, Monday. Everybody comes back. You debate on Tuesday, and you get a bill ideally passed, right? Through the mouthpiece, Janet Yellen, the Biden administration today comes out after the markets and says, oh, we have more money than we thought. We think we can now make it to June 5th. Now, what that really does is it takes the pressure off and lets the pressure of the negotiation go further and further to advance the Biden agenda. We will see if that comes in. And don't write me and say you're so anti-Biden. No, no, no. I am pro getting a deal done. I don't care which way it goes, good, bad. There's going to be give and take. I have seen as much of the deal as you had in the news, so please don't do that. I want a deal like all of us do because I don't want us to go into default. But what the Biden administration did, come on, they could have said nothing. They could have kept this in their back pocket, let the bill get written, sent on to both parties, and get the thing rolling. By doing this, I guess that came up again. We'll talk about that at the end of this. But by doing what they did, and I think you can appreciate what I'm saying, they take that away, the urgency. No, now let's talk. We don't want to go with that. This is all from Biden. This is not from the Republicans, all right? They're the ones that pulled the rug at the last minute and did this. You honestly think after the close of business on Friday or late in the day, right at the end, that this was just discovered? If you do, how foolish you are. Okay. So when we take a look at the market for the monthly chart, this is pretty important. You are back over the 18-week average. You are up for the month 24 points. You are up, not in percentages very big. You're up for the month 0.6%, but you are up 24 points on a monthly basis, on a closing basis. When you look at the weekly charts of closes, you are up this week now another 1/5 of a point, 20 basis points, 20%, 20 basis points, any way you want to cut it. And you're staying with a bullish bias. When you look at the chart action, you can see the market's back up to where it's been. You've been fighting in this 4,200 zone, as you know, for a while. You closed over it. Any way you want to tell me about it, you're back up and over that number, as you can see. You did that last week, and you're trying to hang right in there at this point. The trend is most certainly to the upside. You have higher lows, higher highs. The market is fighting at the 100-week moving average. Analysts will have a field day with this. What has kicked the markets, obviously, is the great news that we saw out of NVIDIA. The great news that we're seeing that everything in AI along with it is being pulled higher. This is the next big thing for the moment. I want to use the word for the moment. These things have a way of flashing, and yes, they'll be there for years to come, but they front load so much of it in that they get people caught at these big numbers instead of coming in on breaks. I mean, I wish I would have known NVIDIA's earnings were going to be what they were. I wish I would have known it's the first company that can add that much value in a day. I didn't know. I assure you, Kathy Woods, no matter how she tried to phrase it today, she got out of this in January. Here's her innovation stock, and she's left at the starting gate because she got out. It happens. I feel for her. I truly do. Higher lows, higher highs. The market over the 100-week average. So if it goes here, the Bollinger Band's your next stopping spot, the logical one. Currently, it's 42.81. That number will change during the week, but that's your resistance, and you're embedded. Everything here is still bullish. Now, you put fear in the market by this Janet Yellen move, no question about that. But this market's been able to get by all that fear and just goes, we're going to get a deal and that's it. And even today's numbers, they're downplaying already, saying, nah, the Fed's not going to go with that. They're coming up with all the reasons. I mean, logic would tell you if you saw today's core PCE, and that is one of the favorite tools of the Fed, what was bearish in that number? They'll find something, but there was nothing there to say that it is weakening. I mean, that's just reality. In the Dow, it doesn't have AI. Okay, so the companies here, you have a higher high and lower low going nowhere. NASDAQ, here's the darling of it. And these are new highs on the move. And for the year, this is a heck of a move. And for a week, come on, 3.5% in a week. It's not as good as your T-bill gives you a 30-day bill, which is near 7%. You do understand that. But it's really good return. And obviously, if you caught the individual stocks that did it, you had a stellar week. You're at the Bollinger Band. The market's at 14,332, and the Bollinger Band number's right here at 14,131. So you're finally got over it. This is the first week that you're actually over that number. You only stay over it 5% of the time, but you can go up a couple of weeks in a row. So I'm always nervous. The Russell, no, the Russell's still bearish. It can't seem to get out of the way of the 18-week average and the 200-week in gray. It is still bearish, but it is very oversold, and it's not being dragged along. In the 30-year bonds, you just keep adding yield to everything. And now with what this is, this could be even more. But I certainly looked at this market today and the action of it and how it finished the week. And let's face it, all right? Inflation is sticky. You may not want to think so. You might say, oh, the recession's blah, blah. It's so sticky and rates are so high, there's the lag effect. What is wrong with everybody? The higher the rates are moving right now, if they stick anything like this, it's like the Fed going up another half point on its own, in addition, whatever the Fed's going to do. You're really starting to tighten down on this economy. Same thing in the 10-year notes. You were up we're down 1%, which means the yields are really shooting higher again. And you're seeing that if you're watching them each day, what they're adding. In the dollar's getting the benefit of, gee, we don't know how the world's going to react. Will we get a debt ceiling deal or not? I think that there's 99.99% chance that you're going to get a deal. What it is, how they do this last bit of horse trading, and the extra time, it's all meant to make you absolutely rip the hair out of your head because you want this to be over so you move on to the next event. They're not going to give you that. If I'm there now, why am I, if I am the Democrats? I think I don't need to make a deal with you today. I really don't want to move on this issue on work. And you can fight this battle and revisit a few other things if you have to. You have more time. When your back's against the wall, it's one thing. She just gave you to January 5th. And on the 5th, she'll find it to the 8th or 9th. I mean, just how it's going to work until they get what they want. In the eurocurrency, higher high, lower low, market momentum down. How do you, if you're a foreign currency, withstand the high interest rates in the U.S., still a relatively good, strong economy, and you want to own the reserve currency if things go very south in the world by the U.S. going into a default. Again, I don't think we're getting even close to a default. But interest rates can keep going up, and that just keeps the pressure on it. Canadian dollar, higher highs, lower lows. I don't see a pattern there. And in the end, it's back down to now lows that, remember, we had this one fabulous rally. Now you're just falling apart again. Is they're doing nothing to say that the yen has to find a support here? Nothing. They're not even going to fight the wage growth if you were watching the central bankers today. So down, but I would never tell clients to sell under a Bollinger Band. Bitcoin did terrible in terms of this or Ethereum joining in this parade of protection. The market peaked out back in April, and it's just been falling ever since then. So it's not the storage of value that you think. The question that the market should worry about is if you close under 25,962, could you get a leg that carries you back down here? This is the all-important support. The combination of the 200-week average in gray and the 18-week, you're there. This is where the market's got to find that support. In the oil, you've got the June 4th OPEC meeting. And again, Mr. Novak speaking, he thinks for all of OPEC Plus, no, they're going to hold steady. I don't know they're going to hold steady. I listened to that Saudi minister. That was a shot across the bow to anybody that's trying to break oil prices via the futures markets. But he is saying to you this is what Mr. Novak said. We're not cutting. Russia's not going to cut any production. They didn't even do the 500,000. He's not saying that, but all the oil shipments prove that that wasn't done. What he's saying is, if you guys want to cut, terrific. I don't control you, but it's called OPEC Plus. The plus isn't going with you. That's what he's saying. And he'd love it. Let them cut. Let them try to jack the price up. He's got to sell his oil at a discount because of the sanctions, but it won't be discounted as much. In other words, if you're back to $80 Brent versus $75 and you offer a $15 discount, it's 15 off of 80, not 15 off of 75. Smart man. He's got that figured out. So he's speaking what he thinks is going to happen. When we look at the Brent, if you can get the market up, the resistance is right here. You have the trend up, the bias down. You're not trending in the market per se. The bias down, trend up means you're washing each other out. Same in WTI crude. So I think you're going to be looking at the battle at that 18-week average. Gasoline up to back to the resistance, actually, not new, but back to the resistance we've constantly had. This 100-week average of closes. And notice, not trending. You went from the upper Bollinger Band to the lower, and you've just stayed in the sideways action all the way through. So you put it together. This is what you've got. And as I talk about it and teach about it every morning, I give you the trade ideas. And I get very cautious in some of these markets. I don't want to take risks over a holiday period that you don't have to. It's called trading. Investing's very different. Investing, you stick, you see the reasons why, whatever it's going to be, and you hold on, and you don't care. First of all, you don't want the leverage. If you do, you generally get hurt. Trading, you want the leverage because you're traders on it. But I'll teach you how to work the Bollinger Bands, the outside days, the full charting. You pick the course you want with any one-year subscription to my research. You can keep the course. You can give it as a gift to a college grad. You can give the research itself is the gift. You keep the course. We'll work with you anyway. The courses begin when you tell us to begin them. So you buy it now. You may not want to take it until mid-June, July. Doesn't matter to us. We have records. We'll keep it and we'll turn it on. The courses will contain the charting software you need. Let's assume you buy the futures course. I'm going to give you the Spider ETF for a few weeks so you get to see what that does too. So you're basically getting everything for a bit here, but the courses are so important. They will embed in you ideas. That's what it's about. How you get it? Move your cursor up here. You'll see an icon appear. Click it, fill out the forms, and away you go from there. If you have questions, you can call my staff. If you're on my mailing list, I've sent you emails on it. We'll take a few-day break over the holiday, and then it wraps itself up early next week. So time is running out. You're not going to get this again for a long time, so take advantage. I'm Ira Epstein. Enjoy Memorial Day. Thank you, all you Civil War soldiers, for all the freedoms that we ended up with. I'll see you all come Tuesday morning. Take care.